Hello, everybody. Today is Thursday. So we had some news, but we had two bits of news. And when we have two bits of news at different times, the market gets a bit helter skelter, right? It just goes a little bit crazy. So I don't trade when we have two bits of news at different times. It just makes things a bit hard to kind of pinpoint. I try and avoid it. I was busy anyway today, so I just decided stay out of it. The other thing is I'm using a different screen recording, different headset, um, just trying to get the background noise out the way. So apologies again for that. All right. So today I want to really just talk about why I only stop trading after one setup, right? Per day. I don't look for multiple setups a day. And the reason is very simple. I lost a lot of money trying to perfect an entry, right? So I do my analysis, I get my setup, get my entry, trade fails. And I say to myself, well, the analysis is correct, right? So I enter again, and then suddenly I've probably entered 5 times in one day, right? And I started to do this very often, and I couldn't really stop not doing it. It didn't matter. The worst was when, if the very first trade, and this happened both ways, by the way. So if the very first trade was a loss, I'll be like, okay, that's fine. I'll reset that and take the next trade. That just put me on a spiral, put me on a down spiral. So over the years, as I moved from my basic model, which worked perfectly, I never understood why I moved away from it. Well, I know why I moved away from it because I used to swing trade, which used to give me 3, 4 trades a year. All you needed was one trade to work to day trade. Day trading is the worst. But look, we are where we are, and prop firms have made it even easier. So the way I designed my model based on the original is so that it does one thing for me. Well, a couple of things. So the first was overtrading. How do I stop myself from overtrading, regardless of if I, you know, make money or a loss? So the way the model works, it would only really pick out the one setup, right? The first thing, I mean, there's some details here that I'm leaving out because it's a bit too technical, but the first thing was to focus on a session, right? Focus on a specific time period, etc., and not try and find the setup everywhere. That was difficult because when I was trading with volume, it was very hard to, to initially hard to focus on a specific session or stuff like that. Over the years, I did create a framework for that. I may talk about it in the future called Blast. Um, and that framework became the basis of what I'm doing now, right? Well, it contributed to what I'm doing now. So the model now that I use right now, oh, by the way, I'm just looking at ES. I'm not trading today. I'm just watching the way it moves. And so the way I trade right now is really, as you know, guys, very simple. It's a measured move. So I call it's basically a fib model. And you find your direction. One second, guys. All right, so I was just about to burp real bad. Right, okay, so you find your direction, because your direction to quantify it is always going to be on the 5 minutes. So having these clear rules help me first focus on it one time frame, 5 minutes operational time frame. Higher time frame, 30 minutes. Okay, done. What session? New York, AM, done. So I don't look at anything else. I don't look at the PM session. I don't look at London. I don't look at Asia. I just look at the New York AM session. That gets a little bit, you need to get used to that. But the only way you get used to it is if your model always appears in that session. If it doesn't appear in that session, then don't trade that session. My model is really simple. It's direction, fair value gaps, fibs, DFF, right? So the reason I keep it that simple was because at least once a week, it doesn't have to be every day, it repeats. Even when we have crazy news days, you will see the same cycle. Because what I realized was, hang on, what are the what are the most common things that happen? Sorry guys, if you're hearing that background noise, apologies. It's my microphone. Um, so what are the most important things that happen when price moves? If you think about it, step back and think about it. Right? One thing you'll probably say is, if I was to ask you, is you either say stop hunts or liquidity. Like price is always hunting liquidity. Okay, great. Price is always hunting liquidity. What does that actually mean? Like how do we know this? Oh, old highs or old lows? Well, liquidity is not always at old highs and liquidity is not always at old lows. So we don't know. That makes it difficult to trade. You have to be a specialist to truly understand where liquidity is resting. Okay. So I didn't understand that. I didn't get that. What I understood was price always moves in a zigzag manner. Always. It doesn't matter where you look. It's always moving in a zigzag manner. So if it always moves in a zigzag manner, how do you actually take advantage of that? What is the thing it always, so price always moves in zigzags. And based on that, the model was born. Simple. Find a direction. And in my case, I used 30 minutes or 45 minutes based on the anchor. So I try to anchor on the 9:30 or I'll anchor at key times, key macro times. This is where other bits of learning comes in, unfortunately. So here we just wait after the news. What do we get? One direction. The next part is what? Retracement into a fair value gap, 5 minutes. That fair value gap must overlap with the fib. That's it. And then you target, there's a fib here, 30 fib, and a 30 fib there that overlaps. And you just target 100%. How easy is that? From there to there. That's it. So the most difficult thing with this strategy, and this is where it gets a little bit technical, is understanding which fair value gaps will hold. And that just comes down to experience and practice. Over time, understanding the personality of your security, you start to understand when and what fair value gaps it'll use, what fibs it'll use, and when it'll use them, right? So I'll probably explain that in a different video, some of the things I look for. But the key is the direction. And direction usually takes roughly about 30 minutes to 45. It's always that time. So if you see direction going that time that looks clean, I will say, hang on, that's the direction. And it's only in that session. I'm not worried about other sessions. I may use other sessions as a reference, but that's nothing to do with the model. That's just to do with my brain. my brain can switch off. It takes everything. It takes ICT, it takes VSA, it takes FIBS, it takes all kinds of models, and it can't tell the difference between right or wrong, up or down. It's just there in my head. So this is why my model doesn't have rules. It's a framework for simplicity. Because when you have rules, you're just stressed out following your rules. You're just stressed out. You're gonna break them anyway. I break them all the time. I realize what's the point of having rules if I'm just gonna break them. So instead, I just use a framework. What that did was it made me chill out and made me understand that the less things I have in my framework, the easier for me. And that's why I use the direction, the fair value gaps, and the fibs, because it's one piece of information and then the next piece of information. I'm not looking at all these things at the same time. The only thing I'm looking at when I look at the charts is, do I have a direction? If I don't have a direction, I do nothing. So today we had news, and usually when you have news at different times, the market is a bit chaotic. So not trading. I may not really get a trade until February. So far, no trades this week. But there was one nice one today, but just after news. But I wasn't at my PC. I wasn't watching this. And there's actually another one here. This is, if you look at this, this is your uh, market maker model, buy sell model or sell buy model. Again, other bits of information creep into my head. Shouldn't I should just stick to my model. So I'll have to keep reminding myself, only focus on one thing. First, the direction, and then when I have a direction, I forget about direction. Then I just focus on fair value gaps. And when I have my fair value gaps and the retracement, I focus on the next thing, right? So it's 100%. It's always 100% symmetry. You can do 161 as well. Uh, and you can do 200. But that's when the market is moving really fast, really quickly. But every day, regular day thing, it's always 100 and it's always in session. It's best if it's in the session. So AM session, it does it. PM session, it does it. Sometimes it bleeds across, so it might set up in the AM and not deliver until PM. I hate those ones because it just means I'm at my computer for too long. Anyway, guys, I mean, that's it for this video. Don't want to keep it too long, but it's just a video to just explain why I just really stopped trading after one setup because I'm done for the day, right? It's just one session, one micro session, simple rules. I either make money or I lose money. That's that's it. There's no retries, there's no try again. It is difficult, but the solution actually was not having more rules for me. It was just focusing on the frameworks, having clarity rather than having prescription. That's what worked for me. All right, see you tomorrow.